Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Jamil bin Salim. My metric number 10DIB 19F2032. Assalamualaikum warahmatullahi wabarakatuh. Today I will present about the calculation of enhancement. For question 1, y equals to RA equals to E divided by V times with RE plus D divided by V times with RD equals to 9,000 divided by 18,000 times with 0.1 plus 9,000 divided by 18,000 times 0.1 equals to 0.1. In percentage, 10%. VL equals to VU equals to EBIT divided by RY equals to 35,000 divided by 0.1 equals to 350,000. For question 2, RE equals to RA plus RA minus RD times with D divided by E equals to 0.1 plus 0.1 minus 0.1 times with 9,000 divided by 9,000 equals to 0.1. In percentage, 10%.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Shamsinar binti Azman. My metric number 10DIB19F2036. Introduction. The amount of debt or equity for financing operations and assets is known as the debt-to-equity ratio. Exchange by firms to suggest the use of debt or equity for payment and to balance the optimal capital structure. Optimum model structure. Number 1. Exchange theory. Company total debt financing and total equity financing. Number 2. Theoretical structure. The company decides from which source of funding. Number 3. Cause of financial distress. Used in corporate finance where it symbolizes the financial condition of the company in terms of debt payments leading to bankruptcy. Number 4. Financial deterioration. Obtained through debt capacity, lines of credit, and surplus assets. Financial downturn is used in 3 ways.
Hi, my name is Siti Haja binti Manaf. My metric number 10DIB19F2027. Conclusion. The choice of capital structure is important to private companies. It directly affects the company's ability to create shareholder value because the balance sheet set a minimum threshold for companies' cost of capital. Investment in a business must meet this threshold or value will be destroyed.
Next, I will present for question 2, trade-off theory. The trade-off theory of capital structure is the idea that a company chooses how much debt finance and how much equity finance to use by balancing the costs and benefits. The classical version of the hypothesis goes back to Cross and Liseberger, who consider a balance between the debt weight cost of bankruptcy and the tax saving benefits of debts. Agency costs are included in the balance. This theory is often set up as complementary theory to the pecking order theory of capital structure. As the as the debt equity ratio leverage increases, there is a trade-off between the interest tax shield and bankruptcy, causing an optimum capital structure. The top curve shows the tax shield gain of debt financing, while the bottom curve includes that the minus the cost of bankruptcy.
The pecking order theory. The pecking order theory, also known as the pecking order model, relates to a company's capital structure made popular by Stewart Myers and Nicholas Magaluf in 1984. The theory states that managers follow a hierarchy when considering sources of financing. And the pecking order theory also state that managers display the following preference of sources to fund investment opportunities. First, through the company's retained earning, followed by debt, and choosing equity financing as a last resort. Cause of financial distress. Financial distress is a condition in which a company or individual cannot generate sufficient revenues or income, making it unable to meet or pay its financial obligation. This is generally due to high fixed costs, a large degree of liquid assets, or revenue sensitive to economic downturns. For individuals, financial distress can arise from poor budgeting, overspending, too high of a debt load, loss of employment. And the second is, if a company or individual experiences a period of time when it cannot pay its debts, bill, and other obligations by their due date, they are likely experiencing financial distress.
Financial slack. Financial slack is the untapped debt potential of a company. It may be availed from unused debt capacity, unutilized lines of credit, excess liquid assets, and various other sources of cash. Slack is an important measure related to the debt capacity of a company. If a company uses capacity, the amount of financial slack will be zero. In such conditions, the company will be unable to meet unexpected costs that may be necessary for the good health of the company. Financial slack is referred to as the unused tap capacity of the company. The unused tap capacity is the amount of tap a company can source for use in various investment projects. It is useful because companies usually need money to grow or expand. The financial slack helps companies to do so in times of need.